Hello traders, welcome to your Follow the Bots S&P 500 Daily Market Recap, sponsored by Zaner. Since 1980, Zaner has been helping futures, commodity, and forex traders trade smarter, faster, and easier.
Hello traders, Bill Duryea here with Follow the Bots. Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Sunday, September 15th, 2013. Last week, the S&P 500 broke out above near-term resistance at or near 1670, 1675 and traded up to 1690. As we have been noting since the S&P formed a base of support back in late August and early September, the market is now on a path heading back to retest its multi-year high. There are two minor resistance levels for the market to auction through as it trades back into the upper trade cluster. 1696 and 1700 were the two minor highs that the S&P was unable to find buying interest above when price pulled back from its multi-year high in early August. The pattern in the Dow 30 is very similar to that in the S&P. The Dow also traded above its prior multi-year high made back in May in the beginning of August. The Dow also consolidated at its new multi-year high before breaking below near-term support in mid-August. The Dow pulled back at or near 1470 to its prior lows made back in July and reestablished a base of support. Similarly, the Dow broke above near-term resistance at 1520 this week and is likely to auction back and retest its multi-year high up at 15,500. The Nasdaq 100 has been outperforming both the Dow and the S&P. This week, the Nasdaq has already auctioned above its prior multi-year record high at 3140 and auctioned up to a new multi-year high at 3180. During Friday's session, the S&P auctioned within the parameters of Thursday's trading range. The market structure from last week's market structure indicated support in the S&P was down at 1668 and 1670. On Wednesday, the S&P pulled down to 1671 before auctioning back up to 1684 to retest the prior high. On Friday, the market made a modest pullback slightly below Thursday's low, auctioning down to 1674, 1675. However, when the selling pressure ended during the pullback, the S&P was unable to auction back up to the prior high at 1684. Instead, the market stalled for the majority of the trading session, auctioning up to 1682 and pulling back no further than 1679. Friday's economic data disappointed market participants as retail sales fell below expectation. The impetus for the rally this week has primarily come from China. The world's second largest economy has shown major signs of improvement, with exports exceeding expectation and GDP expected to come in above 7%. The major economic event this week will be the announcement by the Federal Reserve on September 18th about the new course of monetary policy. It is widely expected that the Fed will begin to reduce its bond purchasing program and begin cutting back on the $85 billion worth of bonds that it has been purchasing. However, there is vast speculation in light of the poor U.S. economic data as to the extent of the Fed's tapering. The so-called tapering light approach may be favored by the Fed, in which case the FOMC meeting may turn into a non-event. Estimates as low as $10 billion fall into the category of the so-called tapering light. However, should the reduction exceed the $10 billion and press up to the $20 billion a month, we would expect to see market participants react negatively. The reaction may not be apparent following the immediate announcement, as any reduction or cutback in the Fed's quantitative easing monetary policy will have major implications for global central banks and will likely be first seen in the currency markets when these banks have to adjust their reserve currencies. Should the Fed go down the path of tapering light, we would certainly expect to see the S&P auction up to its multi-year high and extend the trading range to a new multi-year high. However, as we have commented before, there is no multi-year high in the history of the S&P 500 since its inception that the market has not sold off from and pulled back significantly. Therefore, we see no reason or evidence which would lead us to believe that even in the event the S&P modestly extends the trading range higher, that high too will ultimately be excessive and the market will pull back significantly off that high, as it has historically done in the past. Trading opportunities thus far during the recovery rally. The best trading opportunities during this leg of the recovery rally have been to buy pullbacks. While the pullbacks have been modest, in each case the S&P has auctioned back to the prior high and/or extended the trading range higher. The ideal short location will be during the initial retest of the multi-year high up at 1705, 1709. Coming into Monday session, minor support rests at Friday's low and the low the S&P auctioned down to on Wednesday. Near-term support remains at 1668, 1670. That concludes our daily recap for this Sunday, September 15th, 2013. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. Log in and join us some morning at the open.
For more information regarding Zayner's brokerage services or the content of this broadcast, contact Neil Rogers, nrogers@zayner.com, 312-277-0135. This is Cuerva from Follow the Bots. Happy trading.